Yo, what's up, YouTube? It's Mr.BuyTheDip back here with another video. It's been a few days, and I've just been surprised and I've been stunned by reality income. Okay, this stock is something I have been talking about. Okay, even in my last video 3 days ago. Okay, it's currently February 22nd, right? So 3 days ago, it was 19th, right? And if you even go back to Wednesday, we see it was at 55 and it had a little rally up. This gap right here, it's such a strong gap, right? It goes all the way up to 57.09. This is not the highest it's went up. This is a $65 stock. If we look at it, it can go up to 65, 64, but it's really that dividend yield stock that you need, okay? As much as I like this push up, this is a stock you hold for 5 to 6 years and you just collect dividends on them. Right, but you also have to be careful because the higher the dividend yield, it's kind of a red flag because the dividend yield always fluctuates. So if the company's doing bad, the dividend yields could stop and the stock itself will go down as well. So it's, you could say, slightly a riskier investment, but it's a good way to build passive income. Now, when did I call this? Last video and videos before that. If you look at my last video, I said my stocks are 2025. Okay, again, 3 days ago, February 19th, I said Apple, S&P 500, and then NLY. So I kind of put the dividend yield stocks together. And if we go and look at NLY right now, okay, let's take a quick glance at how much that dividend yield is and how it's cheaper than reality income. So 12.02%. The only reason I like reality income better than NLY because reality income actually pays dividend yields monthly. Okay, so the big three, these are my big reasons. Okay, and I'm going to narrow it down for you guys and keep it as simple as possible. Consistent dividend payments. Okay, they do monthly paid dividends. So instead of a different company paying you back in 3 months, right, quarterly, reality income is going to pay you monthly. So let me show you guys something. I invested in the stock December 10th, okay? The goal was to earn dividends the next month. And what happened, I earned dividends next month, 7 cents. Now, I was looking at this, I was like, okay, I kind of like how the stock rallies up towards dividend payments, okay? Look at January 15th. Towards that, you see how the stock rallies up, okay? We look at January 15th, about right here. Okay, and this is around the time they pay out dividends, 54, and boom, we see that 56. Okay, so that's super exciting how how the market can settle down and they get excited and they see that themselves earning money, building passive income, and they dump more money in. Now let me tell you something, as the stock can go lower, okay, if we see 49, 48, okay, what is going to happen? Because here's the risk you're taking. Okay, if the stock goes lower, the dividend yield potentially is going to go lower. Okay, 4.9, 4.6, you're still going to earn higher dividend yield, right? But the only thing is, how is the market going to act and react if this price goes down towards dividend payments? Okay, so instead of this stock trying to rally up towards January 15th, let's say it goes lower than 52 and hits 50. Okay, what were people going to do then? You have to think about these things as well. Some people probably would have sold, right? Oh my God, the stock is going lower. Let me sell, right? So there's always a risk towards quote unquote a safe investment. There is nothing that gives you 100% full return, and even if it does, it's going to be really long term. It's a safer investment. You're going to get rich when you're old and wrinkly and 65, about to die. Okay, so there's a give and take. This is a safe investment, but you still have to understand the risk. Okay, now reality, it's reliable dividend growth. The company has long history of paying reliable and increasing dividends. So there's always one thing I'll tell you guys to look at is time frame and history. Okay, how long do you want to hold this stock? 8 months, 9 months, 8 years, 9 years, right? When we're talking about a dividend paying stock, you want this to be slightly longer than your average midterm to short-term investment. All right. And also strong business model. They're in their real estate sector. So if the real estate area of the markets are doing not so well, Just give it time. It's going to grow over time. Properties go up all the time. Okay, so I'm not too into real estate right now. I'm just really a stocks guy, but my portfolio, if you notice, is diversified. I'm into software/AI with Nvidia and AMD. I'm into a risky investment with GameStop, and I'm also doing an ETF, which is my long term. I'm going to add more into when we go under 595 soon. Okay, so keep these things in mind, and notice how the dividends the dividend dates, as soon as it gets closer with reality income, they kind of rally up. So this push up is increasing. It's very exciting to see. It simply means more investors are just looking towards the stock. The best way to maximize your opportunity is be at the party before everybody. So if you're investing when the stock starts to rally up 5% in a week, that's not the best time, right? You kind of missed out on the train, but I guarantee the stock is going to dip back down, because a lot of people are seeing profits at share prices like these right here, 54. They put probably $1,000 here at 53, and they're probably up right now, alongside their dividend yields. So it's not bad to sell at this time, but if you're a long-term investor, you don't care about short-term to mid-term gains. Okay, you got to be patient. You got to focus on the main goal, which is 8 to 10 years. Okay, keep that in mind, and this is the stock you need to add on your portfolio. Okay, diversify, have that ETF. I'm not saying do these long-term boring investments. The fun is in short-term / midterms, right? But be a little safe. Okay, so thank you guys for watching. Like and subscribe. Mr. Buy the Dip is out.